The level of tariff increases announced so far is significantly larger than anticipated.
Fed Chair Jerome Powell says Trump's tariffs were even higher than the central bank had expected. Michael Landsberg of Landsberg Bennett Private Wealth Management, what did you make of Fed Chair Powell's comments today?
Lisa, I thought a lot of it was expected. I think he understands they don't have a real grasp of where anything's going to go. Growth is going to decelerate. We had that decelerating pre-tariffs. And obviously with the tariffs, it's a cloud about what's going to happen. And I think some of their guesstimations as to where we're going to be are very clouded at this point. I think the market hoped that he would be clairvoyant and tell us where everything's going to go. But in reality, they haven't really had a good direction of where inflation is going to go in the last year or so. And I think right now you're in an environment where it's probably better to be patient than not.
So Wall Street's main indexes were down before Powell started speaking, and they fell further. So what specifically do you think really concerned investors the most?
I think there was talk there that the tariffs were going to affect earnings later on. And he didn't necessarily say how much it was going to be, but obviously the idea that it was larger than expected in terms of the tariffs, I think scared some of the market participants to say, hey, maybe earnings may decelerate more than we're expecting. I think most on Wall Street are expecting a deceleration from the first quarter to the second. It's still up year over year, but there's obviously going to be deceleration. Right now it becomes unknown. And I think the big issue we're going to see with earnings coming out is the earlier in earnings season you are, the better your numbers are going to be, because there's less tariff talk and less some of this investor sentiment that kind of crept in the back half of the first quarter.
When you hear Powell say something like these tariffs were so much larger than we were expecting, what do you think? I mean, between that disconnect between the man who runs the Federal Reserve and the man who runs this country, does that surprise you at all? I mean, what are your thoughts on that?
Yes, I think most people on Wall Street thought this was going to be Trump 1.0, just continued, that the tariffs were going to be basically a big stick that Trump would use to kind of beat people into submission. And I don't think they really thought we'd actually get actual tariffs. In reality, we've kind of positioned for the fact that we're going to get tariffs. It shouldn't have been much of a surprise to people because Trump gave everybody a month before Liberation Day to say these are tariffs are going to be here. So it's tough for me to believe that nobody thought we're going to see tariffs. Yeah, they may be a little bit higher than some other spots, but the fact we got them shouldn't be a surprise. And I think now what's happened is, the president's had to walk back some of them related to Europe. But I think now, obviously, what's going on with China, I think it's going to be here for a while.
Powell was very clear in saying that Trump's tariffs moved the Federal Reserve away from its dual mandate, right? So most traders at this point are still expecting a June rate cut. Do you agree with that?
I would. I think the Fed's going to cut multiple times this year simply because the fear of a recession is going to be here. I don't think necessarily the numbers are going to get you there. I think inflation's coming down. I'm not sure what data Chairman Powell's looking at, but I haven't really known what data he's looking at the last couple of years. He thought it was transitory when it went to 9. Last year at this time, he thought it was going to go to 2 and it went to 3. So I'm not sure what data he's looking at, but when I look at earnings, they are decelerating. So I think that's a little bit of a concern. They won't get to be recessionary levels. And inflation is going to be low. But what I think has been good has been the job markets have held up very well. I think Wall Street clamoring for Fed rate cuts will probably get some. I think there's a lot of chatter. A lot of market positions aren't in good shape. I think you'll get some probably starting in June.
With more market volatility likely ahead, are you somebody that's buying on the dips in particular areas?
Absolutely not. So what we've done here, and back in January, we rebalanced. We took some exposure off the table in February, specifically in tech and the Mag 7. Our belief is not that we don't like those companies longer term. The market was too concentrated. They had great wins in 23 and 24. It made sense to take money off the table from a rebalancing standpoint. We also looked and said, so much of the market has been driven by those 7 to 10 names. There's going to be a kind of a correction at some point, and we've kind of seen that. I think the areas you want to look at is stuff that's worked. So for example, gold miners have worked, insurance has worked, staples has worked. We continue to add to those. I don't want to be buying tech simply because I think tariffs can continue, and specifically with China, large supplier of product in the tech market. We don't know what's going to happen, so why kind of stick your hand in there to potentially get it kind of bitten off?